Hi, this is Francisco. I'm going to be presenting the last part of this PowerPoint for the local and state taxation, and I'm going to be talking about the duties and obligation of the seller and the purchaser. Obligations. The most important obligation for the seller. Hold on. Hey, Mike, we have to start again. Hello guys, this is Francisco Paulino. I'm going to be presenting the last part of our presentation, and I'm going to be talking about the duties and obligation of the seller and the purchaser. Obligation of the seller and the purchaser, just as I say. The most important obligation that needs to be identified from the seller perspective is the obligation to collect a tax, and what happens if he fails to meet that obligation. For the seller, the most important obligation for him is to pay for the tax, and that obligation exists even if the sale is illegal under state law. For example, it may be illegal in Massachusetts to buy weed, but if you buy it, and that's maybe considered a taxable item, the buyer is responsible for paying for those sale taxes. In Massachusetts, if they find out, they will go look for the taxes. Now, there's a distinction between the legal liability and the economic incident of a sale and purchase of a taxable item. And one is the legal liability, which rests on the party who is responsible for the payment of the tax in the state law. So his responsibility to pay the tax, like almost 99.99% of the time is on the buyer, the legal liability may rest on him. Now, there is an economic incident. For example, as I say, most of the time the buyer is responsible to pay for the tax. But what happens if the seller failed to collect the tax? Now, he may be responsible, and when he's responsible for paying for the tax, that's what we call economic incident, and that rests on the seller sometimes, and even and sometimes the economic incident may rest on the buyer. For example, you go to buy a TV and the seller failed to collect the tax from you. Now, at the beginning of the day, if the seller was compliance, you will have to pay for the sale tax, but he failed to collect it from you. Now he's responsible for that tax liability, but also you as well. That's what we call economic incident. Now, there is a distinction between pure sale tax and privilege tax. The pure sale tax, if the purchase is liable for the sale of both legally and economically. As I say, depending on what type of taxability the state imposed on the seller and the buyer, it may be pure sale tax and privilege tax. Privilege tax is the purchase bears the economic incident of the tax, but only bears the legal incident if the vendor failed to bill the tax on the invoice for the taxable goods and services. As I say before, if the seller failed to bill him for the tax, he will only bear or whatever. Sorry, make this sucks. The legal incident of that transaction and those taxes under that transaction. Sale tax and use tax. They look the same. They cost the same money. They're different. Sale tax is a consumption tax imposed on the sale by the state or local government, and a conventional tax sale tax is levied by the point of sale and collected when you purchase or you sell the item. It's collected by the seller. Example, a business is liable for sale tax in a given jurisdiction, and you have nexus there, which is maybe an office, they have employees, they have a facility. Example, you go and buy 10 computers to Best Buy and in a New Hampshire store, and they're gonna deliver it to your location in Massachusetts. Guess what? That seller, even although they don't have, you buy in a store in New Hampshire, because they have store in Massachusetts, he's responsible to collect the sale tax from you. Now, hopefully you'll be able to understand the distinction between sales tax. Now, use tax is a sales tax in the purchase made outside the state of residence on taxable items that may be used, stored, or consumed in the state where you live, and for which no tax will be collected but in the state that you purchase. As I say before, and I mentioned New Hampshire because I love New Hampshire, they don't collect sales tax. If you go to New Hampshire and buy a TV and they fail to collect the tax from you, sometimes they don't have responsibility, but sometimes they do collect it. But if they don't, you buy the TV, you buy a $2,000 TV, and you're supposed to pay 6.25% of tax, sales tax. But live in Massachusetts, we want a piece of that cake. They won't want to tax you. And if you are honest with you, for your tax return, you're supposed to report that you purchased those items outside the state and you didn't pay the sales tax that you were responsible to in this Massachusetts law. Here's the distinction between the sell and use tax is use tax is always the responsibility of the buyer. With some distinction, for example, California, which they tax everything, is supposed to be Massachusetts, like us. California don't impose the burden of collecting sales tax on the seller. Instead, they impose on them the responsibility to collect use tax. If the item will be used in California, they have to collect the taxes. An example of the difference between sales tax and use tax is, for example, in California, if you live in California, if a California purchaser clothing from an online retailer in Oregon and doesn't collect the sales tax from that purchaser, by law the purchaser must pay the use tax and the clothing to California, just as I said before, using Massachusetts and New Hampshire sample. Duty to collect the sales tax and or use tax. Okay. The duty to collect the sales or use tax are imposed by the state and local government. Thus, the duty to collect either sales tax, use tax, or both depends where the sale take place in the law in that particular state. In that change, state to state. Example: California, as I say just a couple of seconds ago, do not impose on retailers the duty to collect sales tax. Instead, they impose to them the duty to collect use tax. Further, if the purchaser can show that taxable good and service were purchased from a California retailer, then the buyer, the purchaser, do not own the duty to pay the use tax. The letter of the law. The California law states that every retailer engaged in business in the state and making sale of tangible personal property in the state shall, at the time of making the sale, collect the use tax from the purchaser and give to that person a receipt. A receipt from the retailer engaged in the business in the state, given to the purchaser, the buyer, is sufficient to relieve the purchaser from further liability for the tax to which he received the receipt referred. For example, and that's important, this regulation in California make a decision. And for example, what happens if you go to buy something, you buy an item, a taxable item in a store, let's say a TV, and you pay the sale tax or the use tax, but the seller failed to pay the state the tax that he collects from you. Having that receipt release you is sufficient to relieve you from the duty of paying those taxes again, because those taxes were never paid, although they collected for you, but that should be sufficient for you to be released from, so the state can go against you and try to collect those taxes. New York, I don't like New York. In New York, every vendor have to collect the sale tax from the purchaser. If the vendor failed to collect the tax, then the vendor is liable in addition to the purchaser. You go to New York, you go to the Yankee Stadium, you buy some taxable item, they fail to collect it. Maybe the Yankees are losing that day, or they winning and they're so happy and they don't collect the tax from you. guess what? Maybe Derek Jeter is going to have to pay those taxes. They be responsible for the taxes as well as you. And if you want to be in compliance when you file tax return, you're supposed to report those taxable items that you purchased and you didn't pay the sales taxes. The letter of the law. On the New York law, every vendor of tangible property or services is required to collect the sales tax if the goods or services that they sell are subject to tax. Every person is required to collect the tax from the customer when collecting the price. Every person required to collect any tax to be personally liable for the tax imposed or required to be collected. Where any customer have failed to pay the tax to the person required to collect the same, then such a tax should become payable by the customer. You see? New York is different in that way from California. If you fail to collect the tax in California, if you have the receipt, the state cannot go and try to collect taxes from you because you pay. New York, they are not that good with you. If the seller failed to pay the tax, they still can go against you. They try to collect the sell tax on the side. You know, and it's very likely they will go to a small dog like me and maybe you. Well, rich people sometimes buy crazy stuff. Like if you buy an airplane and sell taxes $700,000, believe me, they will go to the buyer, and they will go to the seller, and they will make sure somebody pay the duty. Duty to collect sell taxes and use tax. Continue. Ohio. The vendor and customers are personally liable for the amount of tax applicable to a transaction, and the assessment against the vendor does not discharge the purchase liability to reimburse the vendor for the tax. In addition, the vendor assessed sell tax that he failed to collect from the customer have the right of action for reimbursement for the buyer. Ohio, I wish Massachusetts was like that if I'm going to sell it. In Ohio, if you're the seller, you have the opportunity to go and sue the buyer to collect the tax from them if the buyer, when you sell him, failed to pay the sale tax. You can sue them. You can get an action to collect the taxes that you pay the state because they failed to pay. You can go against that. You can go against the customer and try to get your money. You see, big state come against you as a seller. Now you can go to the small buyer and try to get the money from them. I don't recommend that action because you will lose clients. Nobody will buy from you. In Texas is imposed on the seller the obligation to collect the tax. A seller who makes his sale subject to the sale tax imposed by the chapter they have, when they make the sale, the taxes become part of the sale price. It is a debt of the purchaser to the seller until it's paid. And if unpaid, it is recovered by law by the same matter as the new sale price. What this means is, you buy something in Texas, and let's say you go to Verizon and you get a very expensive phone, $1,000, and let's say the tax rate is 7%, and you have to pay the phone every month. So the phone is $1,000 and the taxes are $70. So you pay like it's popular now. You're paying every month, but you get your bill. The taxes, the $70 are part of the sale price, and they get recovered the same way the seller can go against you to get his money from the phone that they give you in installment payments. That sucks. Duty to collect the sale tax. Now, I have talked. Hopefully, you have been able to understand me. We have talked about the duty from the seller to collect the taxes, and the duty of the buyer to pay them, and what happened if the seller failed to collect the taxes and the buyer failed to pay. But sometimes the duty to collect the taxes are delegated to a third person. Example, New York. A credit company. I mean, this company, I was reading the case, it's a merchant company. They offer credit card processing services to sellers. And according to your order, that merchant services company to pay the sale tax for each receipt that they have. Let's say you go to you go to a store and buy something, and you pay with a credit card, and that merchant company is the one that processed the credit card transaction for that seller. That merchant is responsible to pay from the money that he collects from those credit cards to pay the sale tax to the state. Duty to register. If you don't register, how the hell will I know that you collecting tax from me? You're gonna pay. Every seller and vendor retailer also have the duty to register to collect the taxes. Registration results in the issue of a self-tax permit. Generally, a seller cannot collect the sales tax without permit. The permit must be conspicuously displayed on each place of business. As practical matter, the permit and the number attendant, whatever, are needed to be dealing with the tax jurisdiction or such as completing tax return. What I mean is, most states, including Massachusetts, you have to register with the state, with the Department of DOR, Department of Revenue, Massachusetts. Now, for example, Massachusetts have Mass Tax Connect. It's a very sophisticated online system that you can register and instantly. You get your certificate and you can start collecting and paying taxes. You have that duty. You have to register with the state. So the state knows that you're going to be selling, and that you will be collecting taxes. And part of that duty will be giving a receipt to the buyer. That they proving that they, as a proof that they pay you the taxes. But you have to register, depending on where you are. But if you're in Massachusetts, believe me, you have to. Maybe you don't have, because they don't have sales taxes. But in Massachusetts, you have to do. But like I said, each state have different regulations. For example, the law on California, every person deciding to engage in a conduct business as seller within the state should file an application for a permit. Each application should set for the name under which the applicant intends to transfer business. It means under which name you're going to be doing business, the location and place of the business, and the application should be signed by the owner, if a natural person, by a executive officer or some other person especially authorized by the corporation to sign the application. The thing is, the California, they love to tax people. You have to register, and just like Massachusetts, duty to maintain books and records. Book and records must be maintained and substantiate the return file. Each should maintain those receipts. You or your client have to keep those receipts, because failure to provide books and records to support taxable activity may result in the issue of what is called a jeopardy assessment. Maybe you remember from tax practice and procedure, where Professor Che mentioned jeopardy assessment. What I mean is, if the government, maybe the locals, they're going to believe that you are not reporting all the sales that you have, or you are not reporting all the tax that you have collected from client, they may think, okay, hold on. I think we're in the risk of losing our taxes, the money that they have to pay us. And they can do a job assessment, they can freeze your bank account, and go to your office and make your life very difficult. So you have to keep those records. If you report, let's say that you sell $20,000, you have $20,000 in sales for taxable goods, and reporting you every month or every quarter on on your sales tax return for the state, you should have the receipt for those transactions, so you can, prove that that was the only sale that you have, and that you collect those taxes. Important. We are about to finish, but there are important points that we need to understand for the tax and use tax, for the sales tax and use tax. One of those important things is the destination principle. Massachusetts used that doctrine, destination. What I mean is, if you purchase something in New Hampshire and the destination of that purchase is Massachusetts, meaning you're going to be using that in Massachusetts, you better believe yourself that Massachusetts will want the taxes from that transaction. Surprisingly, maybe you don't know this, now you will. If you cross the state and go buy cheapest cigars in New Hampshire, because they have little taxes or no tax on cigarette. Massachusetts, if they find out, they will tax you a tax of 40% of those on the price that you pay for those cigars, because that's the tax rate for cigarette in Massachusetts. So, because the destination, you're a resident of Massachusetts, the destination of the purchase is Massachusetts, they will go and try to get the money. So that's why most of the people that go buy cigars in New Hampshire, they pay cash. I'm telling you how to break the law. I'm just telling you, I'm giving you an example of the destination principle. Now, constitutional issue, well, we're about to graduate, but, taking taxes, taking money from somebody, you have to be constitutional. For example, if you don't live in Massachusetts, you just cross in Massachusetts and you happen to see a beautiful TV in Massachusetts, and you don't live here, and that TV is going to be delivered to New Hampshire, which doesn't collect sales taxes. Massachusetts don't have the constitutional right to tax you for that transaction. And if you buy a car in Massachusetts and you register that car in New Hampshire, Massachusetts have no right, to tax you, because they just don't have. I don't want to do a constitutional law presentation, but it had to be constitutional. For any state collect taxes from you, they have to have the jurisdiction, the constitutional right to do. And that's an important point that you have to study. Book sales and transferee liability, it's about to transfer. Book sales means that you're selling things by bunches, like installment sales. That's an important point of sales tax, how they are taxed, and who have the liability to pay, who have the responsibility to collect the taxes, and transferee liability. That's another point. When a transfer becomes is taxable as a sales tax, and transferring property, an example would be you own a car, you pay $10,000 for that car, and now you go to the dealer and you want to buy a brand new Mercedes, which costs $30,000. When you transfer your car to the dealer, the difference between what you transfer and what you're getting would be $20,000. Maybe that's the only. Maybe you only have to pay taxes on that part of the transaction. But transfer liability is a big subject that had to be explained by Professor Conway, hopefully. And I thank you guys for your attention. Hopefully you were able to understand my English.